Greetings, members, one and all of the Salivation Nation. Everything is up. Gold is up. Silver is up. All precious metals are up. The Dow Jones Industrial Average is up. NASDAQ is up. The S&P 500 is up. Almost everything is up except for a couple of base metals and a slight dip in crude oil. Let's find out why. Yes, this comes to us from MarketWatch. Gold ends at a nearly 1 week high as U.S. dollar softens to start July's first full week here after coming out of the holiday weekend here. Gold futures finished Monday at their highest price in nearly a week, supported in part by a softer U.S. dollar, which provided a runway higher for the commodity even as global stocks rallied. The U.S. dollar was off 0.5% on Monday dealings as measured by the ICE U.S. dollar index. DXY was down a negative 0.43%, a gauge of the buck against a half dozen currencies. A weaker U.S. dollar can make the assets priced in the currency more attractive to buyers using other monetary units, although it didn't help the base metals much. Seeing as dealers are keen to take on more risk today, it's likely that gold's positive move is almost exclusively down to the weakness of the dollar, said David Madden, a market analyst at CMC Markets UK, in a market update. I think that's key because typically that is the case, and sometimes the dollar can be weaker and everything else does fine, and gold will rise. Moves in the greenback came amid a broad rally in equities that has been attributed to a surge in Chinese markets. Beijing's state-run media published a front-page editorial encouraging investors to buy stocks to support domestic markets. Still, investors are wrestling with the climbing tally of new COVID-19 cases in the U.S., concentrated in a number of hotspot states, including Arizona and Florida. Texas as well, known as the Sun Belt, is where these cases are. In fact, there's more cases and increased hospitalizations, but the death rate has actually gone down. Bullion prices don't typically jump because of social unrest or geopolitical strife, but if the stresses add to a financial crisis or economic slump, gold prices can spiral higher, says Adrian Ash, Director of Research at Bullion Vault. I will also say that in many cases it will, because they do almost immediately, especially geopolitical strife, will have an effect on the prices, and we've seen that time and time again. Even if it's just the psychological fear that it will, even if it doesn't directly have an effect, they will go up. Against that backdrop, gold rose $3.50 or 0.2% to settle at $17.93.50 an ounce, the highest finish for the most active contract since June 30th, when prices ended above $1,800 for the first time since September 2011. That's the futures prices. Prices on Thursday ended 0.5% higher for the holiday abbreviated week, according to FactSet data. Gold saw some pressure, briefly giving up earlier gains that had lifted prices to as high as $1,799 shortly after economic data released Monday showed that the Institute for Supply Management's index of non-manufacturing companies jumped 57.1% in June from 45.4% in May. So that's interesting. So that's, very good. So these gains, they're have an effect there. The market, the single biggest increase since the survey was created in 1997. However, growth looked so strong because it occurred after a few months of extremely low activity. So you have to keep that in perspective too. But it's a bounce back, and that bounce back is very, very good. But we have a long way to go, and there's other metrics and those are other things in the economy that we have to keep in line or keep perspective on. But this is good news. And Daily Note explained last week's swing towards 2011 levels in U.S. dollar terms near the $1,800 per ounce is attracting a flood of new interest. piling on top of January to June's heavy demand. Fear of missing out could spur a dramatic spike in gold if the economic, health, and political news continues to darken, Ash said. Heaven forbid we get a hot, angry summer to match 2011, but rarely have there been so many tailwinds for gold. The economic slump caused by COVID-19 has spurred record government deficits and central bank inflation to try and offset it. China's power grab in Hong Kong is worsening geopolitical tensions ahead of November's U.S. election, with the UK's looming no-deal exit from the European Union now baked in the crust for December. Meanwhile, September silver was up 1.68%, rose 26 cents, or 1.4% to $18.58 an ounce, after the metal put a weekly gain of 1.6%. Among other metals traded in the COMEX, September copper was up 1.53%. I think it's down now. That's the futures, though. $2.70 a pound. Platinum was up 1.18%, and palladium was up a percentage point to $1,952.30 an ounce. So there you have it. Like, what are the metals doing right now? They are all up. All of them are up right now. Gold is up to $1787.40 for the ask price, up 0.68%. And the silver performing a little better there at 1.5 points. Percentage increase 27 cents. Now at $18.39 an ounce. Still not terribly excited about silver now. But if we see more activity like this, where it performs better than silver, than gold, then we'll see that ratio narrow down to realistic levels or normal levels that we've seen in the past. And really, that's what I'm hoping for. I want silver to perform better, but it just hasn't. And I think when it gets above $20, $21, $22 an ounce, and it continues to beat in performance day on day to gold, then we can start to really root for silver to kind of squeeze in that ratio. Platinum up 2.5 or 2.75 percentage points. Pretty amazing increase for platinum there, up $22 to $832. And palladium was up marginally at $13 in 1990. Still can't break through that $2,000 an ounce level. And rhodium is the best performer on the day. It's up $300, $8,200 for the ask price, but the bid price is still $2,000 below that at $6,200. That spread used to be $3,000, but not anymore. It's now narrowed down a bit there. Fascinating indeed. So there's where the numbers are today. Everything is up, and we shall see. But if the news continues the way it is and the dollar strengthens up a bit, well, we could see another dip in gold in the coming days, or maybe week. But I don't predict it'll be by much. I would be very surprised if we tested 1750 again in the near future here. Now, it's a sad news for me because I want to get more of the yellow metal, but it's becoming almost to the point of being cost prohibitive. I have one more, tool in my toolbox to try to get another ounce of gold, but it's going to be a little while. But I don't know where the metals prices are going to go. They can just continue to climb up. But gold has performed very solidly above that $1,700 level for a while here. And even though premiums has come down a little bit, the actual purchase price has shrunken down to the point now where you're paying over $1,900 an ounce for gold now in most places if you buy a single piece. And of course, it just depends on whether you use a credit card or not. So it's tough. Credit cards take 3%, so you're paying a lot more for the metal if you use a credit card, dollar-wise. So there you have it. That's the situation as is now. Everything is up. Everything is up except for base metals and crude oil a little bit. And this is one of those times, and we'll just keep pressing on. But those of you holding precious metals, be happy, because you are seeing them do what they do in these times, And we do really still live in uncertain times, even with some positive economic data. But we should celebrate the positive economic data and hope it translates to a recovery that we can be proud of and something that will stick in the year ahead, or for the rest of the year and into next year. We'll find out. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.